Hello, fellow traders. 'Tis I, the Rumpled One, coming to you on Friday, December the 27th. The year's 2024. Let's talk trading. Weekly wrap-up. These videos are for educational purposes only. Your results may differ from mine. And a friendly reminder, as the week is almost over, and in fact the year's almost over. But always have your risk management in place. Never lose more than you're willing to lose on any one single trade. Taking a look at the weekly, the dashboard shows that all the gaps have filled. The pound is right around the weekly open. It's right now it's 1 point above it. Now it's a few pips below it, so they're fighting to see what color they want this weekly candle to be. Looking at the opening ranges for the week, we're inside the opening range. We are below the opening range for the year and the opening range for the month. For the year, we're 152 pips below the open, 875 below the high, and 260 below the low. And as you can see, chances are we are not going to move the yearly high and low this month. We had an inside bar 2 days ago. We broke through the bottom, and looks like we barely broke through the top, and we are within that inside bar range. Range on the day is 70 pips. You see we have two pairs over 100. The pound Australian coming in at 132 and actually leading the beast at 124. Note the dollar yen. It's only 44 pip range today. What has happened there? You can see we are just slightly above that weekly open here. A few hours ago we broke across the daily open, broke through the buy zone, came back down and launched above it. So you can see now we're playing the weekly open crossover. Rats. As you can see here, the red rats are feasting slightly. Or actually, they're preparing to feast, because we're still, well, we crossed out of the upper smart rat zone, or the smart red rat zone, or the red smart rat zone. Bambino flex indicator said to go long. Price near the pivot was a long. And you can see here we crossed those longs. And price near, we almost hit R2, so price near R1 short, so the bias near R2 is also short. So you can see here that H4 candle opened at 74. And we're about 10, 11 pips below that right now. We've taken out today's pivot. We missed the weekly pivot by 3 pips. And we've taken out the monthly pivot. And that was just missed that weekly. You can see here we didn't have much of an upper buy zone. And once again, you can see the action around the weekly open. And the smart ranges. So for the week, 87 pips. That's the 0 percentile over the last 12 weeks. We didn't break out at a high. We didn't break out at a previous week's high or low. So no action there. High minus close for the red rats, 26. Close minus low for the green, 61. Weekly crossover traders, high minus open, 27. And open minus low, 60. So once again, on those static horizontal lines, there were pips to be made. Looking at the price action chart here on M30, you can see, looks like price was going for the cover. We had an outside bar 2 M30s ago. Once again, breaks out of an outside bar, usually big, and you can see that happen there, but that's not always the case. Just like breaks out of inside bars are not always big, but a lot of times the outside bars will give the bigger breaks. But then again, this is holiday season, so you have to be careful as always, but even maybe a little bit more careful because you just don't know what craziness is going to happen. We had a lower high trigger here. That was probably good for a couple of pips. And looking at the price turn wick zones, through the there was a nice one there. You can see right here, touched it and reversed. Some pretty nice H1 candles on the here. Pretty big range. Actually, speaking of range, I should probably have the smart range indicator on this chart. Looking at the daily, you can see we got to a price turn wick zone level and it rejected it. We haven't hit one this week. You can see here on the month, we hit it and price got rejected. So we have not moved the needle on the total range this year. And you know, I was talking about putting buttons on this. I was looking at it and I don't know if it's just, I thought it would be a no-brainer, but I am gonna, if I was to do that, I'd have to rip the code completely apart and start over. I don't know if that's worth it. And other things I'd rather do. So you can see we haven't pushed the range. 1135 and 2021 was only 1089. So we had one lower, one, and 1073 here back in 2012. So we're on the third lowest yearly range here for the past 20 years. So what happens when you have a low range the following year? There was an explosion there, big explosion there. So next year, maybe we're going to put in a much bigger range on the pound dollar. I wouldn't doubt it, considering, you know, the changes ahead for the U.S. Not to get political, but okay, for the week, we're just 1.4 pips below the open at the moment. We're inside that lower wick zone of the previous week. Fade to pivot, lower high, higher low, inside bar. And we've last crossed below that weekly open. So that's what's going on, traders. And, you know, one of the things I've been working on, and I've come to the realization that with all these methods, when you look at the chart, on a Saturday when the market's closed, and even when the market's open, you look at the chart and you can see, hey, if you took this trade, you could have, 10, 20, 40, 50, 100 pips, looking at certain crossovers. Reality is, seems like it's a lot more difficult to get those pips. I've been trying to think, what's the missing piece? It's like, you have your money management in place, and a lot of times your stop will get hit and then price will turn and go the other way. So then you move your stop a little bit wider and then the stop gets hit and then it turns and goes the other way. And the thing is, I'm just wondering is what is that missing piece? If it was so easy that you just took the trade, or so simple that you just take the trade, you could write an EA, but then even EAs fail. So I'm thinking that the missing piece is that we think that we can do it in one fell swoop. And I don't know if that's true or not. Some traders trade a longer time span, and yeah, they're trading swing trading for a week or days or months or years for that matter. Sure, they can stay in the trade for that. But for the traders who just want to pick off a few pips in the day, it just seems that number one, you have to take profit when you can, and then number two, if anything, you want to decrease the number of trades you take and just really take the easy plum trades that totally fit your criteria. And if you're successful with that, rather than take more trades, you just increase your lot size. So your wins are bigger. Of course, your losses would be bigger too, but hopefully, if all you're taking is 1, 2, 3 trades a day and you can easily make 3 winners in a row, for the most part, it just seems like, up in that lot size so you don't get killed. And of course, if you're going to do that, you avoid the news and things of that nature. And of course, you always have a stop loss in place. But it just seems like there is a missing piece. So if any you traders have an idea what that missing piece is, let us all know. Because maybe there's an answer out there, and I'm not 100% sure what it is. It seems like there's a combination between, you have to have your method, your strategy, but as we said, sometimes that's the least important. It's more the money management, the risk management, and overall, if you think every time you put a trade on, it's basically you're saying I'm going to actually take a risk right here. We think of it as trading rather than risking, because that's really what we're doing. Every time we put a trade on, it's a risk. And if we remember that, our wins are luck because we don't control the outcome. We can control how little we lose or how much we lose, but we really can't control how much we win, because that's up to the market to give us that opportunity. And if the market gives us the opportunity, even to take a pip or 3 points, it's up to us to take it, because we just never know. I mean, you could grab that pip real quick, and then next thing you know, it runs in your favor another 5. But there's no reason to be upset. There really isn't, because there'll always be another trade. So, fellow traders, I'm going to wish you all a fun and safe holiday weekend. Be careful out there. There's a lot of crazies on the road, people doing crazy things. And we've got, a couple trading days next week, except I think the New Year's Eve is going to be pretty dead. But always remember and never forget, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.